Hi there. So in this week, DMart came up with its quarterly results, and overall results do not look very encouraging. What we did was we again leveraged BARD to actually ask it all the questions related to the quarterly results, and the results are not encouraging as you would have seen in the price if you're tracking it or if you own it. Now, here are the key points that are there in context of DMart quarterly results, and we used BARD and the process that we had shown earlier on the channel. Now, the first thing is that the revenue is up by 17%, which is decent, but the profit went down by 3.6%, and that's why overall market has not received it positively. Now, if you look at the same store sales growth, it increased by 3.6 year on year in this quarter, which is not bad, I would say, because that's a decent up move. And the number of stores added by DMart during the same period were 4. Now, most of the analysts were expecting more stores to be added, but it's only 4. And approximately, we have around 310 stores from DMart, and each store average size is 25,000 square feet. And it trades at a P of 108, so the market definitely gives it a premium, and when it gives it a premium, it expects growth. Now, if we look at the key takeaways from this, one of the questions that you obviously will have is that if the revenue has gone up, which means the sales have gone up, then why is the profitability not going up? Now, at least based on whatever is the analysis, be it through BARD or in fact it also pointed out that the management also pointed out the same thing, that overall lower margin products were more into the sales, and because of that, although the revenue has gone up, but because per unit margins are less, the overall profitability has gone down. Then even in terms of why the markets received the overall quarterly results negatively was because most of the analysts were anticipating more than 4 stores to be added, whereas it added only 4 stores. And if DMart wants to be tracking towards the North Star metric of having 1500 stores in India with coverage in tier 2 and tier 3, then 4 in a quarter is a fairly low number. But then the flip side of it is some people are also approaching it that they want to optimize the profitability at each store level before they expand aggressively. So it makes sense. But yeah, markets received it negatively because lesser number of stores were added as compared to the anticipation. Another reason is obviously the rising cost of manpower. The fact is that after the pandemic, the manpower cost has gone up significantly. So it is definitely there as part of the quarterly report. And real estate, it is difficult to get real estate at reasonable price, and especially the kind of property that DMart looks at. And they're not looking to lease these properties. They're looking to actually buy these properties because that's the model with which it operates. So the real estate cost is also added to it. Then the higher cost of procurement, definitely inflation has hit. So the same product which was earlier at a X price, now it is procured at a higher price. But if the price is passed on to the consumer, then you might see drop in the people consumption pattern, and the buyer at DMart is definitely very, very price sensitive. That is what DMart specializes in. So that's why it's not easy to push the price directly to the consumer. So it might be eating away into some of their profits just to ensure that the overall consumption pattern is maintained. Now, what they also did during the cycle, which is probably a positive thing, that is that they continue to invest in the online platform, and it became operational in Mumbai and Pune. Now, this is the first quarter in which it was operational, and the general guidance from DMart is that it is not expected to cannibalize the existing sales. It's only a complementary channel, and it is expected to bring some upselling. But it will only contribute marginally to the overall pipeline because DMart is a brick and mortar business at this point in time, and it plans to be that, but it needs to have an online presence, so that's why it is there. So those were the takeaways. Overall results are not very positive. Now, if as a investor, what I would say is that the recommendations would be that, the key takeaway is still the same, that expensive at the current valuations, because what we're talking about is 108 P, which is fairly expensive, and the store expansion is not at that price. So if you were to just look at the trust that, okay, I have invested in this particular stock, and is it giving me that it's showing me that run up, then definitely this one is a negative quarter for that. More stores were anticipated, profitability margin should improve, and if you are already holding the stock, then I would still say that it is wait and watch for now, and not a time to actually make purchases. Now, if you look at the stock in the last quarter, it has improved, is trading below 4,000 rupees. Now it is 4,000 plus, even after the dip that it took during the this week. But I think the way it is moving, it will go down a further in the coming 2 to 3 months before you get to know about the next quarter. So if you want to actually go ahead and leverage the query that we have used for on bar to understand this, you can the link would be available, you can check it out and further query it. It also has links to the some of the articles from different analysts, especially the one which is positive and one which is negative. So I'll see you in the next one, wherein we'll cover another company. For now, that is the wrap up for DMart. Thank you. Bye.